Hello and welcome everyone to the FXTG educational webinar. How are we today? We all well? We can type in the chat box if someone can hear me. All good? Fantastic. Okay, just a general advice disclaimer that I have to read out, and for people that are phoned in as well. This presentation is aimed to be educational in nature and should not be solely relied upon as a recommendation or an invitation to enter into a particular transaction or to apply a particular trading strategy. You should not engage in trading unless you understand the nature of the relevant market, the rules, application of these rules to the strategy or strategies where you trading, the products, and to the full extent of your exposure to the risk of financial loss. If you are in any doubt, you should seek professional advice. The advice contained in our site has been prepared without taking account of the objective financial situation or need of any particular client, and because of that, the client should, before acting on advice, consider the appropriateness of the advice, have regard to client's financial situation and needs, and you should know that Forex TG, also known as FXTG, clients are required to read all product statements and their three. I will see that there for 20 seconds or so. Am I playing up? Can we be clear now? Can we be clear now? Just bear with me a moment. Okay guys, I'm just trying to see if this sounds a bit better now. Good. Okay. Okay, so we went through FXTG educational webinar with what we're doing today. We went through the general advice disclaimer, and welcome. Why listen to me? Finally, guys. Well, I'm a member of many Forex societies, and I've been trading the markets for over 11 years. I've traded with many professional traders and firms. I've traded with National Australia Bank, Merrill Lynch, IWF Portfolio Services, Bank of America was one of my last little gigs I did, and I've been trading for over 12 years, so I should really change it from 11. I've taken many people's lessons and I've become able to piece together some profitable strategies for you guys. I do these webinars because you guys have asked for this, and I've got a gift for teaching and helping people, and I actually enjoy helping and teaching people. So this is one of the reasons why I'm doing this today, and I hope you really enjoy it. Okay, what are we going to talk about today? Well, we're going to talk about a few things. Well, the power of currency correlation. We'll see correlating live orders, and we'll see how they actually work. And current economic conditions, we'll have a chat about that. That's usually open to discussion to anyone that wants to talk about anything and everything. It doesn't have to be about the economy. It can be about your trading strategy, if something that you're doing is working or if it's not working. You know, it can be any question you want to ask me. How many girls were you with last night, or how many boys? That's a question I get asked a lot, so you can ask me. I'm open to any discussion. Okay, well, this is what I've quoted. I've quoted, the most advantaged way of trading is understanding correlations. If you can understand a trading correlation, pretty much you can understand how to make a lot of money in trading. And not just make a lot of money, you can understand risk, and you understand diversification as well. So as you can see here, we've got 4 charts, and they're all set on a daily chart there. We have a pound USD chart on a daily there, and as you can tell with the pound USD, it's correlating different to the other pairs. So I'm going to go through it with my highlighter and point out the differences. So we've got the pound USD, we've got the USD Swiss franc, we've got the Euro USD, and we've got the AUD USD. Now, as you can see, the USD Swiss franc is opposite, completely opposite to the pound USD. As you also notice that with the other pairs, it's completely different. So we have to understand what is correlating. Correlation is something where it moves the same way together. And as you can see here, that ignore the buy lines and the sell lines, they're just orders I had in the market, and I took the screen dump. But as you can tell, that we have the USD Swiss francs on a downtrend, while the pound USD uptrend. Same with the AUD USD uptrend. Same with the Euro USD, which is an uptrend. So, correlation 5-minute table. I'll explain how this table works. Usually when we look at correlating, doing a trade, we usually look at a 15-minute chart. That's what I look at anyway, or higher. I don't look at anything lower. So on a 5-minute chart, what we're seeing is a correlation. We're seeing, as you can see, like the AUD USD is correlating at 100, meaning 100%. The Euro JPY is 13.8, means it's not correlating with the AUD USD too much. Okay, so if you look at the Euro USD and the AUD USD, they're correlating at a negative. Okay, so simple terms means the correlation coefficients highlights the similarity of both movements between two parties. If the correlation is above 80 and positive, without a negative sign, then the currency moves in the same way. If the correlation is high above 80 and a negative, then the currencies move in the opposite way. If the correlation is low, below 60, then the currencies don't move in the same way at all. So as you can see here, low below 60, so if you look at the Euro USD and the pound USD on the chart, is 55.1, they don't move in the same way. They move completely different to each other. So this is a quite interesting currency correlation table, and I'm happy to share it with you guys as well. And then we've got a 1-hour correlation. Remember, the 1-hour correlation is always going to be greater than a 5-minute correlation. And the same rule goes for the 1-hour correlation. If it's above 80 and positive, then the currencies move in the same way. If it's below 80 and negative, the currencies will move in the opposite way. If the correlation is below 60, currencies don't move in that same way at all. So in simple terms, if we buy AUD USD and we longed AUD USD and we also longed Euro JPY, we would have the same correlation. So the pairs will move the same way on an hour chart. If we bought the AUD USD and the Euro USD, they would also move the same way together. So if we purchased AUD USD and then we as a long, and we also longed USD JPY in a 1-hour chart is probably going to go against us or go against the AUD. Either way, they're going to be different. They don't correlate the same way. So a lot of people use it as a hedging tool. For instance, we long AUD USD. We also long USD JPY. More than an hour, one of the pairs is going to lose, one of the pairs is going to win. What a lot of people do is they actually close off one of the pairs that's slightly losing, that's slightly winning. They're slightly losing, and they're letting the winning pair run. So it's kind of a tactic. It's a hedging tactic. It's called a partial hedge. And then we've got daily correlations. Daily correlations is yet again is quite accurate. However, when I look at correlating pairs, I try to look at using a 1 hour chart. So daily is the exact same thing. If it's above 80 positive, then the currency is moving the same way. If it's below 80 and negative, then the currencies move in an opposite way. If it's below 60, the currencies don't move in the same way, regardless if it's positive or negative. Does anyone have any questions in regards to currency correlation so far? They can type in the chat box. No questions? Okay. Okay, so on the AUD USD, what about exotic pairs? Okay, yeah, sure. With exotic pairs is a bit different. We're looking at the majors here, what's mostly traded. With exotic pairs, I can actually pull up a chart like NOK pound is not really an exotic pair. You talk about NOK versus SEK, which is a Norwegian krona, and the SEK. Yep, they actually correlate the same way, the NOK and the SEK. They would correlate completely opposite to Euro USD or AUD USD. They would move a separate way. So if a strong dollar came out, the NOK and SEK would be pounded quite a bit. And if you actually see those trades move during a financial sentiment news or news release, they tend to go down probably 200 to 300 pips. Mind you, the spread on them is probably about 50 pip spread. So yes, they do move quite quick. They move quite quick and erratic. Okay. As a boxer, you should know how quick they move. So we looking at the daily correlation, we have it's not as close as a 1 hour. However, it is a bit more accurate than a 1 hour. Why it's more accurate? I think the longer you look at a chart on a higher time frame, the more accurate it is than looking at a smaller frame. And as you can see, not everything correlates the exact same way. However, they all do move in the same trend. Okay. Now I'm open for questions. However, before I accept questions, I am going to open up my my MT4 trading platform at FXTG, and I'm actually going to go through some of the pairs, and we're going to pull up some of the pairs and have a look at live correlations and see if we can actually do a trade on this, and we can maybe do a live trade and use currency correlation to our advantage, if that sounds good. Okay, I'm just pulling it up now. Okay, on my screen now you should be able to see my MT4 trading platform. Okay, and what I'm actually going to do here, I'm going to I know most of you guys have already got this formula, but I'm going to show you a quick formula that I use, and I'm going to save it for the people that are new in the room. For the people that have seen it before, just hold your breath for a moment. I will get into a bit more depth. Okay, so what I usually do is I ensure first of all that I'm trading on a 15-minute chart. Okay, so I click on the 15-minute chart over here, So I'm on a 15-minute chart. I then go to template. I go to Napoli, and it comes up with these indicators. For me, most of these indicators are quite not useful. I don't use these indicators at the moment, and what I'm going to show you is what I actually do, how I delete these indicators. So I delete every single one except the green and the red. I then delete this indicator. I delete that indicator window. Then I insert volumes, okay, and I leave it plain. Why I like it plain is because obviously the red shows me that it's bearish, the green shows me that it's bullish. It's plain and simple. Nice chart, 15-minute, nice and clean. The practicality is the key here, and the more clean your chart is and the more clean your work is, the more proficient and efficient you're going to be. Okay. What I do in this point of time now is I then go to indicators, and I go to moving average, and I add on a 21, and we add on a 9, another moving average, a 9. We both put them as a different color, so we can make it medium, turquoise. So here we are. So over here I've got it. I've actually saved as a template with a different color, Stavro. There we are. And I've got the settings here on 21 and 0 and 9 and 0. So as you can see here, I've made a template and I've saved the template. To template it, I save template and I save it as Stavro, or whatever you want to call it. So with this template, what I actually do is I've got it saved on a euro here as well. So when I see that the blue has crossed the yellow and it's an uptrend, I see it's a long position. And when it crosses back down the blue below the yellow, I see it's a short position has occurred. And this is quite an interesting indicator that I use. So as you can see here, we've seen the cross here, which is meant it's a long, and we see the cross here, which is a short. As I said before, I've got a simple rule. When this occurs, I enter at the next candle. Okay, the next candle that forms. So on a 15-minute chart, we're waiting 15 minutes. I enter the next candle, and what I do is I put a stop loss of 35 to 40 pips. So 35, and I add on my spread. So 35 plus spread, whatever I'm trading. In this case, it might be 2 pips, for instance. That's what I do. And I put a take profit of only 12 pips. Okay, because I just want to hit my profit target. My stop loss there is purely to protect me. That's all. Purely to protect me. Now, before we actually use a strategy like this in some sort of live trading environment, what I want to do is I want to show you guys how it actually looks on a currency correlation table. Okay, we'll leave gold. We'll leave gold, and we'll do it on a daily chart. How about that? We'll go daily, 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 daily. Okay, guys, so what we're seeing here, actually I shouldn't use gold for this project. I should really switch it off and use AUD USD, because this is going to give us the full effect of AUD USD. At the moment, I believe it's one of the most overvalued currency pairs. Don't know why it's worth so much when employment numbers and interest rates are due to go down fundamentally. But we're not here to talk about that yet. We can talk about that a later date. Okay, So the pound USD. We can see the pound USD's downtrend. We can see this downtrend that's occurred here. And we can also see on a 1 hour chart that the AUD USD, as it's in a world of its own, is uptrending. It's flicked over to a downtrend here with this cross. So if you see that cross there, we can see that it's just flicked over for that cross. Right here. I'm going to draw it again. Right there, it's flicked over for a cross. So on the next candle, you would go short, which is this candle here. This is a short position. This is not actually a signal, guys. I'm not telling you to get in. But if you're specifically relating it on technicals, this would be a short position on the AUD USD. Okay, this is not a recommendation for you guys to get in. As you can see with the Euro USD, we've already seen a downtrend here that's occurred on the crossover that occurred here. And it's correlating. And then you see the opposite has occurred here with the USD Swiss franc and the Euro. Completely opposite. Like a male and a female. Completely opposite. We've seen a crossover occur here and the uptrend come. Crossover occur here, downtrend come. Okay? Now, many of you guys think that, okay, 35, 40 pips is such a large move for a stop loss. Remember, the stop loss we have is an emergency stop loss. It's rarely going to hit our stop loss if we apply this method correctly. It's there to protect us should we fall asleep on the computer, or should you be in the toilet for too long. This is primarily what the stop loss here is used for, and also not to blow your account. There's other methods of using the stop loss, and one of the other methods you can also use is last bottom method. So for instance, we're going to go short on the AUD. I would find the last point of height, find a double top here, and as I'll explain to you what I mean by double top, over here we've seen a hit up, and we've seen a hit up. So then I do know that 10438, around this level, 10438 is definitely a resistance level. That is a support level. The support level I can see here, there's a single support level just over here, which is on 10352, and I can draw that up for you too. We can see that it's touched here and here. So should this break the support level, then it'll be good to see a nice downtrend, obviously to about this level here, which I'll bring up my crosshair on that, which looks like the 1307. So you can make quite a few pips there. 1307. So that'll be the next support level over here. This will be S2, we call it. So this will be S1, and this will be S2. And this is R1 for resistance 1. I haven't calculated a pivot point. I don't believe in calculating pivot points. I don't think they're quite accurate. I like to look at previous resistance and level points as they occur, not mechanically calculating a pivot point. So I'm going to answer a question now. Okay, the pound USD is daily and the AUD USD is hours. What should it be? Okay, yeah, great. We can put a daily on the AUD USD. Looks like it's on an uptrend on a daily, doesn't it? But it looks like the downtrend's going to occur. Nice pickup, Peter. Fantastic pickup, actually. And we can see the levels that we've previously placed. And it's good to see this, actually, guys. It's good that we picked that up, because over here on the daily we can see it's formed a bottom, a bottom. We can also see a triangle forming here, and we can also see an uptrend, which is very interesting to see that all in one. Very, very interesting. We can see an uptrend, and we also know that this uptrend is going to end up being a reversal, because when we look at the 15-minute chart, remember guys, everything replicates from the 1, and then it's magnified to the 5, then it's magnified to the 15. And on the AD USD on the 15-minute chart, we're seeing it drop. The reversal's already occurred. On the 30-minute chart, waiting for the data. I don't use 30-minute charts that much. I usually use 15 or an hour chart when I trade. And then we're looking at an hour. I like using 15, to be honest with you. I think it's a more cleaner way of trading. Does anyone have any questions in regards to currency correlation and trading methods or anything? Now we're open for trading discussion. No one's got a question? Am I still bearish with Euro USD? Yes, definitely. I picked at 128s, didn't I? Mohammed, were you in here last time when it was at 134, 135? I did pick 128. Yes. Yep. Yep. Yeah, I'm still bearish. As I said, I wouldn't be surprised if we see the euro go below 115. I think I'm the first person to ever say that. And when it occurs, there's going to be other people that put up their hand. I think this the next 5 years, and I think up to the year 2018, financial markets are going to be going through a lot of pain, and a lot of and the world is just going to shrink in size in the economy wise. It's grown too much in too quick of a time, and overspending has a lot of credit debt, and everyone's going to feel the ripple on it. So it's important to understand trading now, and understand what you're doing in your investments, and read a lot and be successful at what you do. So when moments like this, should they occur, you understand what's going on, and you can really take advantage of it. Okay. Neville wrote me a question. The moving averages that I use, were they 20 and 9? Yes, they are. The moving averages that I use is 21, sorry. You can use 20 if you like, it just makes it a bit closer, I'll show you. That's all. And if we can go actually closer than 20, we can actually use like a 17 and 0, which brings it even closer. The closer the better. Maybe we can even use a 15. 15 and 9. Just make sure you put a 0 there and the 9. And then 15 and 0 is pretty good. I usually like 20, 20 keeps a bit of a space for me. At least I know if it kicks over, it's kicked over properly. Because as you can see here, see that point there, that crossover? And now if we did this crossover on a 15, that's stupid. It's kind of moved on me. Here we go. I'll draw it physically. Okay, so we know the middle right there. We know that is a that's 15. We'll do 21. See, it's gone off a bit. It's delayed. So you can use 15. 15's fine. I think 15's fine. Yeah, but they're the numbers for you, so I'll confirm that. Can I explain the difference between long and short? Yeah, sure. A long position means that you're actually buying. So you're buying, you're going long. So that's a long position. You're buying. okay? And a short position is just selling. Now, if we buy, okay, in the currency market, which I just did then, just to show you, we just went long. Now, to sell our position, to close it off, we don't press sell. If we press sell, okay, if I press sell, what it does is it opens up a sell, which is a short, meaning that we can buy the market to go down. So the same way that we bought the market to go up over here, we can buy it to go down and earn the exact same amount of money. Okay? Obviously there might be swap rates and interest that you pay if you hold it daily. Okay? So that's what a short sell is. To close off the positions in currency is simple. All you do is you go close order. That's all you do. And then same with the short sell, you close your order. You don't buy it back. Unlike CFDs, where you're trading, for instance, BHP or something like that, where you are actually where you buy the stock, you have to sell it to close your position. In currencies, it's different. If you sell, you short sell. CFDs gets a bit confusing too, because if you sell a CFD, you're short selling too, but you've got to buy it back. So it's a bit different. Okay, which one's a 21 and which one's the 9? Sure. This one here is the 9, the blue one, and the yellow one is the 21. Now it doesn't matter which one crosses over. You're never going to know which one crosses over, okay? When it happens, it's going to happen. But what you're going to have to understand is one thing, and the one thing is you have to understand the trend. Which way is the market moving already? We can see that this is a downtrend. So if we see the yellow cross over the blue again, and it's downtrending, it's still going to be a downtrend, okay? See here we see the blue cross over the yellow, it's done a slight uptrend. But guys, I wouldn't get into this trade. I wouldn't get into this trade at all. And I'm looking at a daily chart. That's a rule number 1. Let's get out. I want to explain to you something why you wouldn't get into some of these trades. Okay. I wouldn't get into any of this here, any of this part right here. I wouldn't have got that. That wouldn't have hit my target. Any of this wouldn't have hit my target. The reason why, because the volume here is so flat, I wouldn't have got in. And it's just a safety measure for me. Now you can say to yourself, there's a lot of movement in this part here. Okay? There's a lot of movement. However, I just want to show you an example why I wouldn't get into that. See this part here, how it's flat? I'll show you a part that's flat. Okay? See this part here that's flat? Okay? That's what happens, usually, 70% of the time. So I'm just cutting probability. I'm cutting my risk ratios. I'm cutting probability. I want to get in with a trend. As soon as I see the crossover occur and I see a bit of a spike happen, so here it is, and then I see it's starting to increase, I say, yep, I've seen spike. I wait another candle. I go long. Now this is a great example. Would have went long here. Okay, stop loss of say 40 pips. Let's just say, take profit of 12 pips. I would have been already out, guys. I would have been in this trade. I would have made my $400 or $500, and I would have been out. Are you using Dunapoli D levels in your trading? What I'm actually using, Mohammed, is a Dunapoli platform. I select Dunapoli. I then delete all the indicators. As such, I add into volume and I delete it. And the reason why I like using Dunapoli, I said, is because it's clean cut. Okay? You don't have to put gel in your hair in the morning. It's clean cut. It's nice and easy to use and efficient. So that's why I use Dunapoli. There's other trading methods I've used. I use another system here, which goes that I created, which which moves when I see certain indicators cross over and patterns. This is more patterns, and I then put my indicator to confirm things. But this is again a different type of trading strategy that I would use there. Anyone else have any other questions in regards to a trading method or strategy that we can use? Or anything in particular? I can help answer any question. Yeah, great question. Great question, and Fibonacci is actually a big topic. I don't usually use Fibonacci because a lot of people have got different learning curve of Fibonacci. Fibonacci is similar to an Elliott wave, and one of the reasons why I don't use Fibonacci is it's a mathematical calculation as well, the same as a pivot line, a pivot point. That's why I don't use a pivot point either, and it's not suited to my trading strategy. Colin's just reading a question. Sorry if I went silent there. I was just reading the question. What volume would you recommend in each trace? I don't understand your volume figures in the order window. I'm just trying to analyze your. Are you talking about trade? Not trade. What volume would you recommend in each trade? I don't understand your volume figures in order window. Okay, so you're talking about like this trade here. What volume would I'm looking at? Are you talking about that volume at all? Okay, Colin, you're talking about this volume? Okay, in each new order window. I understand. You're talking about the volume here, and here the volume, or you're talking about that volume? Why do I have it on 8? I've just got it set as a default 8. It's not because of anything. That's just volume is how much you're buying. That's 1,000, 2, 3, 4. I just have it on 8. What would I recommend? Okay, yeah, sure. Now I understand the question. What would I recommend as volume that you're going to purchase? Quantity. Okay. 1.5 to 2% of your account value. That's the risk ratio I would use. 1.5 to 2% of your account value is what I would use per trade. So I wouldn't try to risk more than that on my account balance. Risking more than that is gets a bit, we're already trading a high risk product. What we're doing is we're minimizing the risk. Same as a person that does bungee jumping. Someone that does bungee jumping along a lot of times, they're you think it's a high risk sport, or throws himself out of a plane. You think it's a high risk sport, but they do it constantly on a daily basis. They're masters of it. That's what we've got to do. We've got to become masters of it. So that's why we use 1.5 to 2%. Martin's asked me a great question. What about using stochastics with multiple time frames to enter and exit trades? Yeah, we can use stochastics to enter and exit trades on multiple time frames. That's not a problem. However, in using stochastics, that's a whole different strategy again. I don't use the stochastic because of I do use stochastics for different strategies. However, in using this strategy, in using currency correlations, I'd use it this way. If you find that stochastics work for you, why not use it? There's a lot of indicators out there, such as MACD stochastics, tricks. ADX is another indicator that I like using. You can use it on multiple time frames. remember, the idea here is to give you guys a base on something, and then for you guys to work on it. And remember, working on a demo and be very accurate on your trading. I have about $2,000. What should I set each trade at? Okay, yeah, sure. So if you've got $2,000, what you do is you do 2,000 times 1.5%. So you're going to use 30 margin, $30 margin. So let's just say 60 because 30 is really not enough. Okay. So we'll go new order. As you can see here, let's pretend you got a $2,000 account. You would use 0.2 or 0.1 buy, and that's only $4 margin there. So you want to risk about $30. So you'd probably use say 0.4, 21. I wouldn't use. I'd use 5, probably 5 or 6, 5 on 2,000. But remember, I wouldn't open more than one position. This is on one single position, yeah. If you open up more than one position, you're not going to be a happy chap if the tides go against you. So maybe start smaller. Start on 0.2. Start on 0.2 with and then just build it up slowly and compound your account easy, and keep calculating it before you put a trade on. Does 12 pip worth to lose 35 to 40 pips as stop loss? The risk reward ratio, I mean. I understand completely what you're saying, but you have to understand something. Okay, I want to show you something. I'm going to show you something without even looking at the market. I'm going to show you something. New order. I'm going to buy, take profit, buy. Okay, I want to show you something. Let's buy. I'm not even looking at the charts. Let's buy. I want to show you a special project. I've showed people this, and people have tried to make EAs from it. I'm not going to buy the New Zealand because it's not actually. Did I buy pound? Not sure if I bought pound. Okay, here we go. There we go, guys. Ready? No stop loss. I don't want to put a stop loss. I'm going to put a 12 pip take profit on every single trade here. No stop loss, just for the project. Oh, look, one's already in target. Okay. I'm pretty sure all those trades will hit next time we come in. They'll hit take profit. The reason why I say that is the market, how it moves like this. Okay? It either moves like this down way or it moves like this up way. But what we have to understand is if your order is there where the red line is, it's still going to move like this on a downtrend or uptrend. So likely it's going to hit my order. What we're doing is when we're getting in with this trend, we're going more of a favor for us. So if this is a downtrend, no, that's an uptrend. If this is an uptrend here, we're using it as a favor for us. We're using the momentum. Okay? And why we put a 40 pip stop loss is to protect us. We don't want it to hit our stop loss. We're not going to put a tighter stop loss of 20 pips and get hit. We want it to hit 12. We don't want it to hit 40. But the 40 is there to protect us because we're already going with this. Unless we see a reversal occur, straight away we would close out the position. If the reversal doesn't occur, then we're not going to put it there. The stop loss is there to protect us if we leave or if we go out or if we step out and it hasn't hit our take profit yet. That's all it is, and if a reversal occurred. Okay? If we put a 12 pip take profit, okay, and a 12 pip stop loss on a single trade, The odds are 50%. It's 50-50, regardless if it's an uptrend or a downtrend. You have to understand that. Because before it goes uptrend here, in this price action, each candle you're seeing here is a 15-minute candle. And in that 15 minutes, the price has moved up and down, up and down, up and down. So regardless, and we can test this. We can test it on this pair here. Okay, we'll go to the 1 minute chart. That's what's happened in 15 minutes. Ready? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. This is 15 minutes, guys. This here is a 15 minutes. What's occurred in 15 minutes. That's 15 minutes worth of trading in the 1 minute chart. So what you've seen is exactly what I said. It's gone like this. Remember, when we're trading on a 1 minute chart, this is 15 minutes worth. So remember, when I said on a 15-minute chart, when we went into the microscope of a 1 minute, you're just seeing all that price action there that I showed you previously has occurred in that little green candle right there. So that's why it's not good to sit there after you put a trade sometimes and sit there and watch the chart. It drives you mad. I mean, it's like watching paint dry. You know, it frustrates you. Paint your room and watch it dry. The same thing as trading. You know, enter a trade and sit there and watch it. Watch it. Watch it. You shouldn't be watching it 24/7. Even if you're a professional trader. I'm telling you now, professional traders don't even watch it 24/7. They understand what's happening. They try to understand what's happening 24/7, but watching that price action is going to drive you mad, just like watching paint dry. You can disagree if you like. However, I've been there. I've traded for 12 years, and I'm sure that many of you guys understand this. That if you sit there, watch it, it hurts when it's against you. When it's for you, you go, yeah, come on, keep going higher. That's what you're thinking. So that's why I have that target, and that's why I put that there. You don't want to be taken out readily by setting a 45 pips. No, I don't want to be. I call it happy sad. Look, look, there will be moments that you're going to get taken out at 45 pips. Okay, and it's not 40. I say 35 to 40 pips plus spread. Okay, there's going to be moments it's going to happen. It's trading, guys. It's going to happen. Okay, if you're scared to lose money, you know, take your wife out for dinner. You know, if you want to make money, you know, you can trade, you can invest, you can work. There's many ways to make money. This is one of my ways, and there's many ways that people use. Now the thing is, in a situation that we use trading, and remember guys, before you use any strategy that I say or anything that I say, test it. Test it yourself, because it might not be suited for you, it might not work for you. You know, just because Ronaldo can kick a goal, you know, 35 meters out, hits a soccer ball pinpoint target, gets it and tells you how to do it, then you guys try to kick in the ball and it goes 2 meters. I mean, you have to understand, it's practice, 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 practice. It's, you know, that's how it is. You got to practice. It's like, you know, what's success, man? Success is a difficult thing, and it's something that a lot of people ask me, what is success? And I tell you what success is. Success is when you can do something like you can breathe. Plain and simple. Plain and simple. I'll give you a story. There was a guy once who wanted to be a millionaire and asked the guru, and the guru said, you want to be a millionaire? Meet me. You've maybe heard this story before. He said, meet me at the beach at 4 a.m. in the morning. So here goes little old Johnny, goes to the beach 4 a.m. in the morning, meets the guy at the beach. Johnny was dressed up in a suit. The guy comes and goes, hey, what are you doing? He goes, I'm meeting you 4 a.m. in the morning. You told me to come here. And he goes, in the suit? We're at the beach. He's like, man, I don't want to be at the beach. I want to make money. That's what Johnny said. He goes, go on the water. That's what the guru said. All right? So the guru is the guy that's cashed up. Said, go on the water. So little Johnny goes in the water. He goes, go deeper. So he's up to his hips. He goes, no, go deeper. So the little Johnny goes, man, I'm in the water. What are you doing? This guy's crazy. I want to make money. I don't want to be in the water. He goes, I'm going to teach you how to make money. Okay, go in the water. Go deeper. So eventually it was just up to his collar, just under his chin, the water. The guru grabbed him from the head, dunks him in the water, holds him in there long enough until the guy's about to pass out. Then lets go of him, and the guy's grasping for air. He's breathing really heavily. And he's like, dude, you're crazy. You try to kill me. He's like, no. He goes, you want success? When you can do things like you're breathing, grasping for air, that is success. What you're feeling there is success. You're breathing. It's the exact same way of learning. For instance, trading. You got to live and breathe it. You got to live and breathe it to be successful in whatever you do. So it's the exact same thing with this guy. You know, like, don't sleep. Don't sleep. There's no time to sleep because you're going to miss the opportunity. That's what I say sometimes. Sleep 2-3 hours, you know. 50 Cent, the rapper. He used to do his own videos, then he used to go home and do his own blogs. And people used to ask him, hey 50, do you ever sleep? And you know what he said? He said, sleep. Sleep is for the broke people. So the same thing here. We don't want to miss the opportunity. So I'm going to get back to the questions before I got carried away a bit. We would not take 12 pips, right? In the cross before the last one, if we went short after the close of the candle, we would not take 12 pips, right? Possibly not. I didn't see. I didn't analyze it. I didn't actually execute a trade. It would have to be a next candle crossover. I didn't see which one it was. Sometimes you're not going to do it. You're just going to, when you see it reverse against you, just go out in profit. Okay, yeah, Colin, thank you. Who do I trade through? Okay, yeah, sure. I trade with about I've got 30 broken accounts. Not all of them got money. I don't trade with FXTG, and the reason why I don't trade with FXTG, it's a conflict of interest because I actually do webinars for them. So it's a conflict of interest. I trade with a lot of brokers, which I don't like to name, especially doing an FXTG webinar. However, I do try to stick to regulated brokers. Thanks, Colin. Alright. Okay, guys. Well, that's all the what I've got. If you've got any more other questions, please let me know, and I'll be more than happy